out there that are just getting started off in stock investing and they don't know how to do this. So I made this really quick video to show you step by step how you'd buy your very first share of stock. So hope you enjoy. So what do you need to know up front? So really there's two different types of brokers, and you've got to have a broker in order to buy and sell stock. So you've got the traditional broker and then you have a discount broker. So the traditional broker would typically charge you about $15 for every single trade that you would conduct. So let me give you an example. Let's say that you wanted to buy some stock of General Electric and you wanted to buy 50 shares of General Electric. So that one trade of those 50 shares would cost you $15 in order to conduct that trade. Now, let's say that you just wanted to buy one single share of General Electric. That would still cost you $15 to conduct that one trade. Now, let's say that it's 5 years later and you want to try to sell that stock. Every time you would sell that bundle or just one share, it's going to cost you $15 to conduct that trade. So whether that's a traditional broker or a discount broker, that fee, whatever that trading cost is, that's how much it costs to conduct each trade. So here's the advantages and disadvantages of using a traditional broker. So the advantage, and this is why a lot of people go with a traditional broker, is because the traditional broker will give you advice. Typically, there's a phone number that you could call. There's a financial planner that you could talk to, and that person could give you advice on whether they think that there's a certain stock that's good, a certain stock that's bad. Whenever I first started off, I had a traditional broker, and the more that I learned about stock investing, and this is no dig against financial planners, but the more that I realized that they don't really necessarily know as much as you might think that they know. A lot of the times what they're doing is they're trying to sell you on a product that their company is trying to push to them so that they can make a larger commission on it. Let me give you an example. So like let's say Fidelity, that would be considered a traditional broker. So Fidelity has Fidelity mutual funds, and you can buy those inside of your brokerage account. So whenever you talk to a financial planner, they might be saying, hey, do you want to invest in our Fidelity emerging market fund or our Fidelity whatever fund? And so it can be an advantage, but it can also be the disadvantage, which you can see I have it listed, the exact same advice listed as an advantage and disadvantage, because if they're trying to sell you on a product that they've made, that's really kind of a bias, and that's something that I don't necessarily think is in your best interest. And so that's why I don't go with a traditional broker now. I actually use a discount broker. So one of the disadvantages, now as we shift down to the discount broker, the disadvantage that you've got with a discount broker is you're completely on your own. There's nobody that you're really going to call up and ask for financial advice on. You are really kind of making those decisions on your own. Now, the advantage with a discount broker is that their cost is typically about half of that of a traditional broker. So for people that are day traders, which I totally do not recommend that you become a day trader, but if you are a person who trades a lot of stock, these fees can really add up a lot over time. Now, I know it doesn't seem like it's a lot of money, but if you would trade just one or two stocks a day, that would really add up to a lot of money, thousands of dollars if you're up in the traditional broker range. So I personally like having a discount broker, and what I like to do is I like to separate the people that I buy stock with. I like to separate that from where I conduct my analysis. I conduct my analysis over at Morningstar, so that way it's basically separating that, and there's not a conflict of interest between the company that I'm using to buy my stock and the place where I'm conducting my research and getting my advice on what I think is a really good buy at that particular point in time. So what I'll do is to show you how you can actually go and buy stock. What I'm going to do is I'm going to open up a web browser and I'm going to create a new account with a discount broker that I personally recommend because I think that their rates are the best, and they really have the thing I really like is it's really easy to use. Like, you can use it on your smartphone. It just has a great interface. Something else that I really like, and this is TradeKing. So let me pull up their site for you. So here's the great thing about TradeKing. So there's no annual fee for using TradeKing. So if you sign up for an account, it's not like you're going to get charged $100 a year annually or anything like that. The only cost that TradeKing is going to charge you is $4.95 per trade, which is significantly lower than what you're going to really find anywhere else, even with a discount broker. So that's why I recommend this company. Something else that I like about this company, which I think is really awesome, is that if you have another account, let's say you have an account with Scottrade or Fidelity or something like that, TradeKing will actually reimburse you up to $150 for any switching fees that you might have if you're coming from maybe a traditional broker or something like that. So definitely keep that in mind, and definitely something that you'd want to contact them about in order to get that $150 back. So as you can see, I'm going to go ahead and fill out this form, and I'm going to take you step by step through this process. So as you come to this next screen, it's going to ask you, is this a joint account, individual account? So this really depends on the person. What I'll tell you is that if you are married and you have all your other accounts as a joint account, you'll probably want to go ahead and select joint account. If you're single, you just click individual account. Something else to think about is using an IRA. So the purpose of this video isn't to really get into the tax benefits of buying stock, but I will tell you this. If you are the type of person that can put money away and you don't plan on touching that until you're going to hit retirement, you really need to do a little bit more research on a traditional IRA versus a Roth IRA. Most likely a Roth IRA is going to probably be a better deal for you, but definitely do the research and talk with a tax consultant about which one would suit your case better. But you might also want to set up an IRA account as well. So something to do a little bit more research on as you're setting up your first account. So just more personal information, you're going to fill this out. Okay, so this is the next step where you're just going to fill out more financial information about yourself and your trading experience. And this is step 3 of 5 steps, so you're almost there. Okay, so this is step 4, and you're just going to answer a couple more questions. So one of the important questions here as you're setting up your account is this margin and option application. So if you're wanting margin, that means that you would be interested in short selling a stock. If you're just starting out, I highly recommend that you do not apply for a margin account and you just say no. As you get more experience, then maybe that's something that you're comfortable with. I don't really recommend a lot of people do short selling, especially with individual picks, and I could get into a lot of the reasons why. If you do want to do some short selling, I would recommend doing that through an index. One of the risks that you run into whenever you do short selling on an individual stock is that that company could be bought out by another company. And whenever that happens, it could really surge the price and you could find yourself in a lot of trouble. So I only recommend margin accounts for people that are really experienced and really know what they're doing. So I would highly recommend that you select no for the margin account. And if you're interested in trading options, that's not something that I've really taught. And then I also think that if you really don't know what you're doing, you'd probably want to select no for that. And if you set up your account this way, you can always go back and apply for it later. I just recommend for people that are just starting off to select no for both of those because you're probably not going to want to be in the position to be playing around with that if you really don't know a lot about it. So I would do the homework first, and then as you learn, maybe apply for the account to have a margin and an option account with TradeKing later on. Okay, so I highly recommend that you read through the customer agreement and the real-time quote agreement. Then once you're done reading that, and you can download them over here by clicking on those icons, you can click I agree. And then you're going to say yes because you are a non-professional subscriber. And after that, you'll just hit continue, and that's it. That's the sign-up process. Okay, so now we're at the point where you got to fund your account. So what you're going to do is if you have a bank or you would like to write a money order or wire some money, it really depends on your personal circumstances of how you'd like to put money into your account. But what you'll do is you'll select one of these 4 options, and then it'll just walk you through the process, and then you can fund your account. Now, if you use the first two options, which is the transferring from your bank, or you would write a check to TradeKing, that's going to typically be a 3-day process. If you do a money wire transfer, you will get that in your account immediately. And there's going to be a $25 fee, typically, depending on what your bank is, if you transfer money into TradeKing. Now, if you transfer more than $5,000 into the TradeKing account, then they will give you that $25 back. But just realize that if you do a wire transfer because you want to start trading now or today, there's going to be a $25 fee with doing that. So if you got a couple days to spare, I'd recommend using one of the first two options. Okay, so I selected the first option, which I'm going to give them my bank account information, and then all I've got to do is just fill out this, and then I can select the amount of money that I want to send into the account. Okay, so this is the final step, and this is the easiest step, which is actually conducting the trade. So what we're going to do over on our TradeKing account, and I have my screen split into two different sections here. I have two browsers open. On the left-hand side, I have the TradeKing account, and over on the right-hand side, I have this U.S. News Money Report. And the reason I really like this money report from U.S. News is because they have a great way of ranking their ETFs. So if you're not familiar with an ETF, I have a link up on the video right now that takes you to one of our podcast episodes where we talk about what an ETF is and how you kind of use it. But what it is in general is it's an index of 500 companies, or it's a pick of 100 different companies, and then you can pick it by sector. That way you're not just buying into one individual company and assuming a lot of risk. So if you're a beginner and you don't have a lot of experience, this is where I definitely recommend that you start, is with an ETF or an index. So when you look at the U.S. News Report, and if you look on the screen right now, I have a link to this U.S. News Report URL, or the website where you can find this exact page that I'm looking at. So you just click on that and it'll take you there. And when you look at this, it'll break down the best performing ones based off of this ranking methodology. If you click on that link, it'll take you to the ranking methodology. But if you scroll down, you can see that they have a whole host of the best performing indexes. And the one thing that you really want to pay attention to is the expense ratio when you're looking at an ETF. That expense ratio is what they're charging you annually in order to invest into that fund. So you're obviously wanting to find something that has a very low expense ratio, but also has a very good performance based on the index that it's tracking. So let's just say that we wanted to invest in this small cap market. Small cap meaning that you're investing in small businesses. This one down here, this Schwab US Small Cap ETF. I'm familiar with this one, and it's about 1,700 small cap businesses inside of that ETF. So you're investing across 1,700 different companies. Now, the nice thing that I really like about this particular index is the expense ratio. So you can see that it's a 0.08%. That's extremely low. Whenever you're looking at mutual funds and things like that, some of them go clear up to almost 3%, which when you compound that annually really adds up to a whole lot more money than you might realize. There's a talk that John Bogle has on what 3% really means, and it's insanely significant. But to spare you on that, and to show you how to conduct the trade, what we're going to do is we're going to go over to our TradeKing account. We're going to highlight trading, and we'll click on that, and then it brings up this page. And so if you're buying a share of General Electric, or you're buying an ETF or an index, it's going to be the exact same thing. And what you're going to do is you're going to select buy. If you were going to sell shares that maybe you've already purchased, you'd select sell. So what we're going to be doing is we're going to be conducting a buy, and we're just going to go ahead and purchase one share. Now, if you remember, one share or 100 shares or whatever the case might be, it makes no difference. Your cost for conducting that trade is going to be $4.95 on TradeKing. So we're just going to buy one share of this ETF, and the symbol for this ETF is SCHA. So we put that symbol in here, and we're going to conduct a market order. Now, I have an entire video that talks to you about what a market order is versus a limit, a stop. So if you look on the screen right now, I have a link to that video where I talk about all those different orders that you can conduct. So I'd highly recommend you watch that if you're curious what these different price criteria have for your order. And then the duration is, when you say a day order, that means that TradeKing has up to a day in order to execute that order at a market price that's currently trading for. Now, the thing is I'm recording this video while the stock market is closed. It's in the evening while I'm recording this. So the trade is going to be conducted first thing in the morning. So all I'm going to do, and you can do it during the day while the stock market's open, or you can do it while the stock market's closed. It really doesn't matter. As soon as you go in, and as soon as the market opens the next day, it's going to go ahead and execute this order. So all I'm going to do is I'm going to click Preview Order. Okay, and then it comes up, it says, and it's just a recap of what I just had put in there. So it's a buy order for 1 share. And then you can see here the estimated commission, that's the $4.95 that TradeKing is going to charge me in order to execute this order. And if I purchased 1,000 shares, it would still be $4.95. So what I'm going to do is I'm going to go ahead and place that order. Okay. And there you can see that's my order status, showing that the order has been prepared for the morning whenever the stock market opens, and then it's going to go ahead and execute that order. Now, let's say that you did all this, and then at the very end, in an hour from now, you had second thoughts on what you wanted to do. You can actually go into your order status and cancel this order because it actually hasn't taken place yet. But if it was tomorrow morning after 9:30 Eastern Standard Time, that's whenever the stock market opens in the morning, I would have to sell this order, and then I'd be charged another $4.95 in order to sell that share. And I'd have to account for whether the stock went up or went down. So if it went down, I might even lose more money than just another $4.95. If it went up, I actually might make money in the short term if I had second thoughts on that transaction. Hopefully, if you're doing things right, you'll buy this and you're intending to hold it for a very significant long period of time as you wait for the profits to accumulate behind that asset that you just purchased. So that's the process. There's not really, it's a lot simpler than a lot of people think if you've never conducted a trade. In this video, I use TradeKing. You could use any broker you want. I really feel that you get a great deal with TradeKing because the commission that they charge at $4.95 is better than anything you'll find out there, and it's a very reliable company. I personally use TradeKing, but that doesn't mean that you have to as well. But if you do want to open an account with TradeKing, I have a link on the video here that you can just click on that. It'll take you to TradeKing, and then you can open your account. So I really hope that this video was helpful for you, and thanks for watching.